Well, the gold bulls have finally something to smile about. We saw a very miserable period between sort of March and down into sort of beginning of July, where we saw a really strong drawdown in most of the precious metals and the basement trades. We've now rallied back. We're just broken for 4,400. Next stop 4,500. We're going through some of these long-term moving averages. We're up 10% from those lows. Now, what's caused that situation? What really pricked my interest yesterday was the idea that oil prices have moved up 5.5%. We saw two-year Treasury yields moving up. The dollar was a little bit higher, but yet we still saw gold continue to push high. Now, that relationship hasn't been the same, and that's broken down, and we've seen gold working in the face of that high yield environment, which is a really new development. Why is the case? Clients are certainly looking to trade this one quite actively now. About 60% of clients of those open positions are long, so they're certainly looking to ride this one up. Now, what we've seen, I think, if certainly break this down into flow and then the fundamentals. The fundamentals was what we saw late last week was the idea that China were coming back in. Headlines that China in the month of July had purchased 20 tonnes of gold. That's 640,000 ounces effectively of gold. That's the biggest purchase, one-month purchase since 2023. That's 21 months in a row. But also you've seen Turkey coming out, Tanzania, you've seen Poland, you've seen Korea coming out and saying that they're going to be starting to purchase refined gold as going forward. So this idea is central bank buying has really set a platform around 4,000 and it's pushed up. What you've also seen is a lot of flow-based effects as well. You've seen CTA, systematic trend following funds, starting to increase length as the price goes up. The market has flipped to this negative gamma position for dealers. So as price is going up, they're hedging their optionality positions by buying the underlying futures. Again, that's just pushing prices up. And people are starting to chase this one now. We've also seen real rates. If you look at two-year Treasury yields adjusted for inflation expectations, they've started falling. Momentum in the US economy is stalling. We've seen interest rate hikes expected coming out of the market. All of this is good for gold. So it's really a function of central bank buying, positioning and flow, GLD inflows coming through and people chasing this one. Can this continue to push to 4,500, continue to kick, or has it gone too far? That's the question we're asking today. Let us know how you're seeing it and trade with Pepperstone.